Hello everyone, how are you all? Everyone fine? I hope everyone is doing great. Today I'll be discussing a question on business combination Ind AS 103 which is given in MTP of May 2024 exam. However, the similar question was given in the MTP of November 2023 exam also. The point is that in both MTP the solution were different. Correct? Means solution of November 2023 MTP and May 2024 MTP were different. The questions were same, and from my point of view the solution given in MTP of May 2024 is not correct as per the information given the question. However, the solution of previous MTP was correct. Now the question is that if in exam the same question come, what we'll do in exam? Let us first read the question, try to understand concept, and let us conclude what need to be done from examination point of view. Understood? Yes sir. Let us first read the question. To listen this question carefully till the end, then only we can conclude what need to be done from examination point of view. Same question comes in exam. Chalega? Yes sir. So on 1st April 2001, and one more point, normally what happens when a same question is given in MTP twice, so that is there is a higher chance this type of question can come in exam. There is a higher chance. Correct? Now I am not saying that it will come, but there is a higher probability that same type of question may come in exam. So what is given on 1st April 2001, J Limited acquired a new subsidiary B Limited, purchasing all 150 million shares of B Limited. Purchasing all 150 shares of B Limited means all the shares of B Limited was acquired. So therefore the date of acquisition become 1st April 2001. The terms of sale agreement included the exchange of 4 shares in J Limited for every 3 shares acquired in B Limited. So what is the swap ratio given? 4/3. Correct. On 1st April 2001, the market value of shares in J Limited was ₹10 and the market value of shares in B Limited was ₹12. Got this point? Yes sir. Let us come to second point. The terms of share purchase included the issue of 1 additional shares in J Limited for every 5 acquired in B Limited if the profit of B Limited for the 2-year ending 31st March 2002 exceeded a target profit figure. Means can I say it is a contingent consideration? Now as per Ind AS 103, any contingent consideration should be included in the PC as per the fair value on the date of acquisition. So of course can I say fair value of that contingent consideration will be included in PC. But what Ind AS 32 says that whenever there is any financial instrument which will be settled in fixed number of entities own equity instrument, it will be always classified as equity. So here because it will be settled in the fixed number of equity shares which is given 1/5, 1/5 swap ratio is given, so we can easily find out a fixed number of equity shares. So it will be initially classified as equity only. Initially classified as equity. Correct? Now normally what happens whenever contingent consideration is given, fair value will be given the question, but in this question the fair value of contingent consideration on the date of acquisition is not given. So what information is given? Current estimate are that it is 80% probable that a management of B Limited will achieve this target. Means can I say there is a high probability that such condition will be satisfied. If the condition will be satisfied, so of course equity shares will be issued. So can I say we can take the most likely outcome method, and because 80% higher chance is that the condition will be satisfied, so based on that we can find out the fair value of such contingent consideration based on the fair value of equity shares of J Limited. Because the fair value of equity shares, market price of equity shares of J Limited is given, so we can find out the number of equity shares and the fair value, so that can be easily calculated. So in this particular question we can find out a fair value of contingent consideration on the date of acquisition, and that will be included in PC. Then third point, legal and professional fee associated with the acquisition of B Limited shares were 12 lakh, including 2 lakh relating to the cost of issuing shares. Means the total legal and professional fee were 12 lakh. Out of that 2 lakh is relating to the cost of issuing shares. Now as per Ind AS 103, any cost relating to issuing of shares will be accounted as per Ind AS 32. So any cost relating to the issuing of equity shares will be deducted from equity, means that will not be included in PC. And any direct cost related to acquisition, means 10 lakh, will be charged to profit and loss account as an expense immediately. Means this 10 lakh out of this 12 lakh, 10 lakh will be charged to profit and loss account as an expense immediately, because legal and professional fee associated with the acquisition that become direct cost of the acquirer related to acquisition, that will be charged to profit and loss account as an expense. That cannot be a part of PC. That cannot be a part of PC. So this 10 lakh will be charged to profit and loss account as an expense, and 2 lakh will be deducted from equity. So that will be also not included in PC. So entire 12 lakh should not be included in PC. Chalega? Yes, sir. The senior management of J Limited estimate the cost of their time that can be fairly allocated to the acquisition is 2 lakh. So what they are saying, the senior management has allocated, because they are also involved in the acquisition, and they have said that they have also spent some time for the acquisition. So the cost of their services is 2 lakh. So it can be considered as employee benefit expense and will be recognized as an expense immediately. If suppose they are also paid 2 lakh. Correct now. But okay, this 2 lakh should not be also included in PC, because it is a payment to senior management in the capacity of employee. So senior management of J Limited estimate that cost of their time that can be fairly allocated to the acquisition is 2 lakh. So this has nothing to do with PC. If suppose it is paid, agreed to paid, it will be charged to profit and loss account as an expense, and as per Ind AS 103, it should not be included in PC calculation. The figure of this 2 lakh is not included in the legal and professional fee of 12 lakh mentioned above. Means this 2 lakh is a separate amount other than 12 lakh. Okay, means this entire para is not relevant for PC calculation. Yes or no? Yes, sir. I will read the solution after explaining the question. The individual balance sheet of B Limited on 1st April 2001 comprised of the net asset that had a fair value at that date of 1200 million. So 1200 million is the fair value of net asset. Additionally, J Limited consider B Limited possess certain intangible assets that are not recognized in the individual balance sheet. Means if suppose any intangible asset which was not recognized in the balance sheet of acquiree can be recognized in the balance sheet of acquirer on the date of acquisition if it meet the definition of intangible asset. So if any intangible asset which was not recognized by acquiree can be recognized by acquirer if it meet the definition of intangible asset, even though it does not meet recognition criteria. Understood? Yes, sir. Customer relationship, reliable estimate of value is 100 million. This value has been derived from the sale of customer database in the past. So customer relationship, of course, it will meet the definition of intangible asset. It is given also following intangible asset. It means these are intangible asset only. So customer relationship, however, we have understood in Ind AS 103 that it will always meet a definition of intangible asset, because these are identifiable. These are identifiable means it is separable, it can be sold, it can be exchanged, it can be licensed, etc, etc, etc. So this will be recognized. So 1200 in this will add 100. Yes, sir. An in process research and development project that has not been recognized by B Limited. Since the necessary conditions laid down in Ind AS for the capitalization were only just satisfied at 31st March 2002. 31st March 2002. Correct? What is the date of acquisition? Date of acquisition is 1st April 2001. So 1st April 2001 is the date of acquisition. Correct? Now they are saying that the condition was satisfied in 31st March 2002. I don't know why this date has been given. This date is not at all relevant, because can I say on the first, because all recognition of IND we are doing on which date? On 1st April 2001. I hope you are understanding. But chalo theek hai. What they are saying that this has not satisfied the condition of recognition. The recognition condition was not satisfied by B Limited. Means it was not recognized as an intangible asset in the books of B Limited. But can I say that in process research and development project will meet a definition of intangible asset and should be recognized as an intangible asset on the date of acquisition by acquirer as per Ind AS 103, even though it was not recognized by acquiree. However, the fair value of the whole project is estimated at 50 million. So this 50 million will be included. To will add 50 million, it will become how much? 1350. The total fair value of INA will be 1350. They have given one more point. Employee expertise, estimated value of director employee of B Limited is 80 million. Can I say any skill employee will not meet the definition of intangible asset, because can I say it cannot be controlled by the entity. It is not identifiable also. So it will never meet the definition of intangible asset. Therefore, it will not be recognized as an intangible asset in the books of acquirer on the date of acquisition. The market value of shares in J Limited on 31st March 2002 was 11. I don't know why it has been given. Let's see. But the market value of shares of J Limited on the date of acquisition was 10. On the date of balance on 31st March 2002, it become 11. Compute the goodwill on consolidation of B Limited that will appear in the consolidated balance sheet that will appear, 1 minute, that will appear, 1 minute, yeah, that will appear in the balance sheet as at 31st March 2002. Now I don't know why they have asked the goodwill calculation as on 31st March 2002, but it should be on the date of acquisition. It should appear in the balance sheet as on 31st March 2002. But can I say on the date of acquisition it will be recognized? Chalo theek hai. With necessary explanation of adjustment therein. So they have only asked the calculation of goodwill. Now let us first calculate PC. PC will be how much? First PC will be what? 150 million into 4 by 3 into 10. How much it is coming, bata? Understood? So this is coming how much? 150 into 4 divided by 3 into 10. So it become 2000 million. So let's see PC. First is 2000 million, correct. Now we'll find out the fair value of contingent consideration. The swap ratio they have given 1 by 5. So 1 second it will be 150 into 1 by 5 and it will be into 10. So 150 into 1 by 5 into 10, it will come 300. So you can see 300 has been taken, 300 has been taken, correct. And case legal and professional fees should not be taken into consideration because that is a direct cost related to acquisition, correct now. And I don't understand why they have taken 1 million, means they have taken 10 lakh. This is 100% wrong. This is 100% wrong because costs related to the acquisition cannot be included in PC as per Ind AS 103. So from my point of view, the answer is 2330. No. It will be how much? 2300. And the calculation is also not correct. You can see how it came 2331. We don't understand what they want to do. Correct now. But the answer should be 2300 from my point of view. I'll also cross check the answer given in November 2023 MTP. And the answer given in November 2023 MTP is 2300 only. Correct? So PC will be 2300 million. Then can I say we need to find out a fair value of INA. The fair value of INA already we calculated. That was how much? 1200 given. Then we'll add 100. And then we'll add 50, so it will become 1350. So they have calculated 1350. Now we'll calculate goodwill on the date of acquisition. The goodwill on the date of acquisition should be 2300 minus 1350. The answer should be 2300 minus 1350 is equal to what? 950. So 950 should be goodwill on the date of acquisition. 950 should be goodwill on the date of acquisition. Understood? Itna samjhe? Have you understood? So this was the first part. Now, because they have asked what goodwill should be appear in the consolidated balance sheet as on 31st March 2002. My question to you all, any fair value of contingent consideration means any contingent consideration which has been classified as equity, whether any subsequent measurement is allowed, no subsequent measurement, and if any changes is there in the fair value. This is not a concept of measurement period, correct now? Measurement period means what? We do retrospective adjustment during measurement period when the initial accounting is done on provisional basis. But here it is nothing given that initial accounting has been done on provisional basis. Initial accounting whenever has been done on provisional basis, then we apply the concept of measurement period. And during measurement period, if any new information obtained about INA, purchase consideration, NCI fair valuation, then we do adjustment retrospectively, and any adjustment will be done with goodwill. In this question, I don't know. In this solution, I don't know what they have done. Let us read. As per Ind AS 103, changes in fair value of contingent consideration that acquirer recognized after acquisition date are measurement period adjustment. How it is measurement period adjustment? Nothing has been informed in the question about the provisional accounting. Initial provisional accounting. Are you getting? And believe me, whenever date of acquisition is 1st April 2003 and this is 1st April 2001 and this is 31st March 2002, so there is no concept of measurement period. Measurement period concept will come when the business combination has been done just before 31st March and the financial statement is approved before receiving the valuation report from the expert. So that in that case we apply the concept of measurement period. Here the measurement period concept cannot be applied. Here the measurement period concept cannot be applied. I hope you are understanding. So what they have given, as per Ind AS 103, the acquirer recognize increase or decrease in the amount by means of decrease or increase in goodwill. Wah. Accordingly, the changes in the fair value of contingent consideration is recorded as an adjustment to goodwill. I am totally means what answer they have given, it is totally not justified. Totally not justified, because measurement period concept will come whenever business combination accounting is done. This business combination happened just before 31st March, and before approval of financial statement we have not received the fair valuation of NCI, we have not received the fair valuation of INA, we have not received the fair valuation of purchase consideration. Then there is a concept of measurement period, and measurement period start from the date of acquisition till 12 months from the date of acquisition. Means chalo theek hai, I don't want to teach you right now measurement period concept, but this is not a question of measurement period. This is not a question of measurement period. I don't know why they have given this. Let me just show you what answer was given in MTP November 2003 exam. What solution? The solution was correct only. I don't understand why they have changed the solution. Why they have changed the solution? There is no point in that. Correct? I hope you understand this. This is not a concept of measurement period. So from my point of view, the PC should be 2300. Fair value of INA should be 1350, and goodwill on the date of acquisition should be 950. Which should appear in the balance sheet as on 31st March 2002. And because the contingent consideration has been classified as equity, no subsequent measurement will be done. No subsequent measurement will be done. Are you getting? So it will no subsequent measurement will be done. So whenever equity is settled, then everything will be adjusted within equity only. Everything will be adjusted within equity. Correct? What the answer has been given. Let's see in MTP November 2023 exam. You can see this is MTP of November 2023. Same question, same to same question. I'm not showing you the question. I'm directly coming to the solution. Where is the? You can see the similar question on 1st April 2001. Here Johnson Limited acquired new subsidiary of Bosman Limited, purchasing all 150 million shares of Bosman Limited. The terms of sale agreement included the exchange of 4 shares of Jonathan Limited for every 3 shares acquired of Bosman Limited. On 1st April 2001, the fair value is 10, fair value is 12. The terms of share purchase include the issue of 1 additional shares of Jonathan Limited for every 5. Means similar. Current estimated it is 80% probable. Then legal and professional fee associated with the acquisition of Bosman Limited were 12 lakh, including 2 lakh relating to the cost of issuing share. The senior management of Johnson Limited estimate that the cost of their time that can be fairly allocated. Similar question. You can see same to same question. In this only one point they have asked more. Also state the treatment of contingent consideration as on 31st March 2002. Actually, this was the correct question. This should be added in the question. This was deleted in the MTP of May 2024 exam. Got this point? Let us come to the solution. Now what is the solution given? Come to the solution. You can see. Yeah, this. The purchase consideration is 2300, correct? Contingent consideration recognized in full, okay, because it is probable. Now as per Ind AS 103, they have given the explanation also. Acquisition related costs are the cost of acquirer incurred to effect a business combination. These costs include finder fee, advisory, legal, accounting, valuation and other professional or consulting fee, general admin costs including the cost of maintaining an internal acquisition department and cost of registering and issuing debt and equity shares. The acquirer shall account for acquisition related costs as an expense in the period in which the costs are incurred and the services are received, with one exception. One exception is related to the cost of issuing equity shares. The cost to issue debt or equity shares shall be recognized in accordance with Ind AS 32 and Ind AS 109, because that will be deducted from equity, and if it is liability, that will be deducted from financial liability and will be considered for calculation of effective interest rate. Correct. Now a statement of fair value of INA is correct, 1350, and you can see the 950 is the goodwill. The goodwill they have calculated is 950. Now they have written one more point for contingent consideration. What they have given? Ind AS 103 provide guidance on the subsequent accounting for contingent consideration. In general, an equity instrument is a contract. They have given the meaning of equity instrument. In the given case, the acquirer has an obligation to issue fixed number of shares. On the fulfillment of contingency, the contingent consideration will be classified as equity as per the requirement of Ind AS 32. As per Ind AS 103, contingent consideration classified as equity should not be remeasured. Any subsequent settlement should be done within equity. That only we have said. So this is the correct solution. From my point of view, if the same questions come in exam, you give answer based on this, because the answer given in MTP of May 2020 for exam is not correct. Understood? That is not correct. 100% not correct. You will be given marks based on this only. I don't know why they have given this particular question, and it is your exam, so you are the better person to decide which one should follow, which one should be followed. And from my point of view, this is not correct. From my point of view, this is not correct. You can give answer based on what? MTP of November 2023 exam. That is 100% correct solution, and I hope you also feel the same. You also feel the same. Correct now? Okay, sir. Because how can you add this? Because if you add this legal and professional cost, then all your previous question where it was charged to profit and loss account as an expense, that will change. So you need to rectify that solution now. Got this point? I hope you have understood my emotion. Today this much only. In the next video, we'll again come with one more new questions. Got this point? Thank you very much. All the best for your exam preparation. Bye bye.